Hi traders, and welcome to the Technical Analysis Market Wrap on Friday the 19th of November. So I've seen some really good moves this week. I think we've been blessed with some of the big majors starting to really push through some key levels, and the dollar index certainly got things rolling for a lot of the US dollar based pairs. So we'll jump straight into the charts and have a look at what we can identify for today's trading and early into next week. So I'll start out here with the Aussie USD. We can see the continued weakness has certainly played the game this week. We saw a little bit of a bounce early, but as you can see, it found that resistance again a little bit too strong. That's a pretty decent roll reversal zone there. You can see that this point here was where it turned around. Exactly where you'd want it to as well, and we're about to get a 20-50 moving average cross as well. So look, that generally signals a little bit more weakness. We've already seen quite a bit of it though, like it was already starting to expand quite heavily up here until it did start to reverse. So now, that did take a little while to catch up. The 20 is well and truly underneath the 50 now, and probably going to provide a bit of a barrier for it to actually, go much higher. So, for mine, this has done the perfect roll reversal each time. It's basically coming down in a very orderly fashion, and I wouldn't expect that it's probably going to reverse anytime soon in any significant way. So what we want to be doing here is looking out for any changes of trend or any hint of a change of trend that's going to look like pushing up. What we may see is potentially a pullback up to the 20 moving average, maybe in the near term, maybe today or early in the week. But for mine, it's probably still looking a little bit weak. I think what we need to do is we've obviously identified that the 73 is a very strong zone for it. So you need to go to the smaller time frames and just trade that way. So you can see here that we've broken down below it. We're hovering around that 72.70 at the moment. I think that it's probably got 72 in its sights if we see any more weakness, okay? So I think if we see a little bit more weakness from this level around here, maybe a break of the 72.50, I think it's a pretty easy scalp down to the 7200. It looks like it wants to go weaker overall, so we're really trying to play that trend. On the 1 hour, look, the only thing that would convince me that we're going to potentially go a little bit longer again is a series of higher highs and higher lows from this point onwards. If we get that, then perhaps we can start looking for a move up to the previous highs here of around that sort of 73, 60 to 70 area. But it is, again, absolute scalp, right? We're not looking at anything too major there. It is just scalping 30 or 40 pips at a time on the Aussie until it gives us some very clear direction. All right, we'll move over to the US Dollar Cad. This has been one of the stars of the show again. I mean, it's been really technical perfection in the way it's gone up, and I think that it's given us some really good opportunities to actually not only join the trend, but probably to stay in it a little bit longer than we otherwise normally would. You would have been able to get in around this level here and definitely push up all the way to the 125.80, I think was the first target. This level here is going to provide a fair bit of resistance for it, I would expect. We can see we've already sold off from this level here. No real surprise there. There's a lot of traffic in front of it. You can see right through here that we're getting a lot of noise, a lot of even right through. It goes back quite a bit further than that actually. So this is a very solid level for it. But it's done its job, right? It's come back. It's tested the 20 and the 50 over here. I'm very mindful though that these are about to cross. We're going to get the 20-50 cross anytime soon. Now it's going to take a miracle not to cross here. So that said, I think that the strength is still here. I think we're going to see probably some more upward movement when it does eventually break this zone, but perhaps it might cool off a little bit and hover around this level here, which wouldn't be a bad thing for it. Consolidation above that area here around that 125 sort of 80 to 126.20 area. If we consolidate inside there for a little while, then that gives us a good launching pad to push up higher into the 128, which is I think where it really wants to go, which is around these levels here. So just one to watch. I think you can scalp it on the smaller time frames. I mean, there's no worries about that. It's been a scalper's heaven anyway, all the way up. You can see on the 1 hour and the 4 hour, you've been given plenty of opportunities to join the trend on the moving averages. But we expect to see that little bit of weakness around this level here. So there's no real surprises there. But other than that, I think we just let this one either pull back a little bit more to give us a launching pad back off the 125.80 to the 128, or if it does kick up from here, start looking for the long opportunities to pull back to the 20 moving average. For it to go short, it's got a lot of work to do. I wouldn't even look at potentially shorting this until it's well and truly below the 125 and well and truly below those moving averages. So as you can see, I know that can happen very quickly, of course, but the likelihood of that happening is going to take a lot longer to play out, and we don't want to be trading a very hard and fast candle anyway. So in our perfect world, we will get a nice pullback to the long, and then off we go again. Okay, we'll go over to the US dollar yen. This has been a little bit interesting, this one. It certainly had a big bounce at the start of the week, broke through the triangle that we drew up quite a while ago, and broke through the key level. Okay, the 114.20 level was a very, very solid zone for it, and certainly really tested those highs up there. Look, this is an interesting one. I know it's reversed down here, but look, after the move that it had, it doesn't surprise me. I think it needs, this is the last line of defense for it though. It needs to actually, it does have to break through this level here to go short, and there's a fair bit of traffic in front of it. So for mine, I would still rather the long. I think it's a better long than it is short, just primarily because of the way it's setting up. So realistically, if this level holds, we will look for long opportunities to break this well and truly. You know, when we go out to a very big time frame like a weekly, you can see that is a pennant type setup. You can see the flagpole, you can see the pennant. If we do get that break above it, the take profit on this is very, very big. It's around 118 or nearly 118.50. So it's a very, very big move from here, about 350 pips. So very, very good trading if that one plays out. And I could certainly see an area where it could definitely break through, but it needs to get past. It needs to close above 115 now. Now that it's tested it, a break above the 114.20 is not enough. It needs to actually close above the 115 now to give us the clarity that it is actually starting to go long. Failing that, the short is basically, of course, breaking down below this level here. This level isn't enough now. It needs to actually get past this level here before we can actually start to short this properly with any sort of confidence. Now, I know we're getting MACD weakness, but that's really a consequence of the flatness of the market. So, you know, realistically, we know we've had a very, very flat period through here, apart from a couple of spikes. That's going to bring and play havoc on the moving averages, especially the 12 and the 26. So that's why you're seeing quite a bit of weakness in the MACD. I'm not paying a lot of attention to that because the MACD on the time frame that you identify the trade isn't always the most important one. Okay, that's very important to bear in mind. So realistically, we wait and see if this one either bounces off this level and sets a new high, and if it does that, we start to aim for the stars. Around the 116 to 117 is the first port of call, but there isn't a lot of real heavy traffic all the way up to 118 at that point, so we could see a really big long trend starting to extend. Failing that, a move down below the moving averages and breaking of this low could bring it back down to the 112, but I know where my preferred trade is, and I'm sure you can see why that would be the case, because it's certainly the easier trade there. All right, we'll move over to the dollar index now. So the dollar index has been the star of the show in terms of pushing a lot of the big currencies around, especially the euro, which we will touch on in a second. Look, it's finding a little bit of resistance at the point where we would fully expect it would. It's already done its job. Look, we've already spoken about this over several weeks now, and you should have well and truly been able to trade a good portion of this move. It's done its job in the first instance. Like, we can't expect it to be going any higher than that, really, without a pullback of some significance. So realistically, probably the pullback that we are expecting is about the 95. I think that would be a nice pullback for this one. I'm not so sure it's going to come all the way to the 20. That would be okay as well. We wouldn't want to all the way back down to this level here. I think that's too much of an aggressive pullback. That would be about a 61.8 pullback of a fib, which is probably a little bit too much really for the move that we want. We want to maintain that momentum and kickstart the trends to keep going. So what we don't want to see is a big drop in momentum, that's what would happen if it came all the way back down to here. So that is not ideally what we want. What we wouldn't mind is a slow pullback down to around the 95 at the 20 moving average catch up. And if that does that and launches off this level here, then the dollar index is set for the 97.98 like we think it's going to go to. So this is a healthy pullback, nothing to be concerned about here, but probably still a little bit more weakness. I wouldn't want it, in fact I probably wouldn't want to turn around here and push up higher. I think a deeper pullback is probably warranted for the move that we've already had. That would certainly make a far cleaner trade. We'll go over to the Euro USD now. So, of course, the beneficiary of the dollar strength is going to be a very, very weak Euro USD, and this has played the game. This has just been absolutely fantastic for trading. I think that a lot of people have got involved in this short. I know that for a fact. I've seen all of the emails, which is really good. Now, look, it's probably due for the pullback, just like the dollar index is, of course. So, what we're seeing here is almost, if it closes here, it's going to be a perfectly formed morning star. Very rare to see the patterns perfectly form on a daily chart. Like, a daily is a very significant time frame. So we are seeing what could be, we have to wait a little bit longer to find out. and it's probably going to finish up exactly where it is now. That said, what that is telling us is we are going for a pullback up to more than, look, the level I would be aiming for is probably the pattern definition. So really what I would be aiming for, I'll just draw it up for you, is the length of the pattern. Okay, so that's what we're looking for. We project that out, and that is the target. Okay, so the 20 moving average will well and truly catch up on it, depending on how fast it moves. That would be a really good target to go for regardless. Even if the moving average comes up before the profit of this trade, then you'd probably have to respect that level. But this is the pattern that we're trading, and it's only a counter trend. It's only a little cheeky counter trend. I'm not thinking it's going to reverse this trend or anything like that. Only a change of trend on a daily time frame with a series of higher highs and higher lows will do that, and I certainly wouldn't be getting excited about that until that happens. But in saying that, it doesn't mean it's not going to counter, and the dollar index looks like it wants to come back a little bit more, which would see this pattern pretty much play out. So, you know, and the way you trade this, you let this pattern play out, let it close as it is, and if the next candle, as soon as the next candle breaks the high of this previous one, then you can look at going along with a stop loss below the lowest low of that pattern. So pretty good trading, and it's been fantastic on the way down. A little cheeky counter trend up to the 20 would be nice, and then we'd be looking probably for shorting opportunities, because that's more than likely where it's going. But in saying that, if we get a series of higher highs and higher lows on a daily, then we change our minds completely and start to look for the long opportunities. All right, we'll go to the Aussie USD, the Aussie 200. Actually, this is probably the one. It's a little bit flat. We'll have a look at both indices actually very quickly, because there's not much to talk about here, in that it's basically leveling out. We know this is a very, very strong zone for it. The 73.50 area, very, very powerful. You can see that all the resistance that was through there, it was support there, resistance again right through here, and it's been holding up this level. You can see it's tried on many occasions to break through, and you can see very clearly that these candles have been rejecting very heavily off this level. Again, this is a daily chart, so it's a serious time frame. We're not mucking around here. And you know, for mine, I would be thinking that it's a difficult one to trade out of this range. I think you can take the smaller time frames inside this channel. There's not too many issues there. Look for changes of trend. You have to go really small probably to get them. If you get a series of higher highs and higher lows, you know, you're aiming for that upper band of 74.80. And of course, around that top level, it's going to be a bit difficult to break, so I wouldn't want to preempt that break. I'd be letting it play out. So really, just opportunities to go long and short inside this channel is all we want to do with the ASX 200 at the moment. That's all it warrants. Okay, we don't want to trade the break of the low or the high until, of course, the daily has closed there and given us a confirmation that we need that zone is broken out. But this bottom has been very, very strong. These rejections are very, very big rejections from this level. So, you know, nothing short of a very strong close outside this zone here would convince me it's going short. All right, the last one we'll have a look at is the S&P 500. This is not a lot to talk about here. We've had an absolutely nothing 4 days. You can see that the range has been extraordinarily small, very, very small candles. No real surprise. I mean, we know we're at all-time highs again, so it's going to have a little bit of trouble, you know, breaking through this level with any significant force, because the problem for me is it's sitting right there as it's trying to break. Usually when you're trying to break a level, what you want is a little bit of a pullback and then a momentum shift up to break that zone. It does concern me a little bit that it came back and then tried to push up and has failed to do so. You know, to me, that's a sign of weakness, and it would not encourage me to be taking a break long anytime soon. In fact, I'd be looking for the shorter opportunities. You can see the MACD signal lines out of the MACD now. No surprises there, the MACD is dropping because we're obviously seeing a flattening market, but it's a tough one to trade, this one. I'm probably leaning towards the short, mainly because of the weakness that has happened here. And when I say weakness, I mean that it's failed to actually make a new high. So although it doesn't look like it's weak and shortening, what it is doing is its ranges are compressing very, very tightly over an extended period, and it's had a momentum push to try and break that high and has failed to do so. That to me is a weakness in momentum. So certainly one to watch. I would be looking for any changes of trend down. If we get that, I think the first level that we aim for is the 45.50. It makes a lot of sense. It's a reasonable move. It does make a lot more sense than trying to push up higher. The push up higher, I think, is going to be, you know, even though it's clear sky above it because it's never been there, it seems to be doing it with a lot of trepidation at the moment. So I would be watching this very, very closely for the short, and I think that's probably a better opportunity. If you want to take the long, go to the really small time frames and keep your trades nice and short. All right, so I hope everyone's had a great week's trading. I think it's been a bonanza from a technical standpoint. Hopefully you've been able to get involved and get some of those good pips. Have a great weekend, and I look forward to seeing you all next week.